Hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and I'll be breaking down today's market price action. It's a Wednesday, March 26th. Let's get into it. As always, we'll be taking a look at broader market analysis, see what's really moving in the markets, take a look at news events, take a look at currency baskets, and then we'll talk about some possible setups ahead. Let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So jumping into the market analysis, let's just jump right into the headlines and numbers. And well, today was a bit of a lackluster day in the markets, even though we got a bit of a sell-off in the broader equity markets. So we did see a bit of a reversal and sort of reversing a lot of the gains that we have seen so far this week. But in the currency market, I've noticed that things were not really following that trend. So things were more on the quieter end. If you take a look at the numbers, both the Australian and pound CPI came in lower than expected. But again, we saw a nice movement in pound this morning, but then it got reversed. So, really didn't have a long lasting impact where initially we did see a sell off on that. Same thing with the Aussie. It did weaken off of that, but didn't really have a follow through. Now we take a look at the U.S. number, the durable goods order. That was a little better than expected. I didn't really see that impacting the U.S. dollar a lot there. So what we notice is that the volatility has really come down, especially if you compare this to the last few weeks. We have been seeing a lot of intraday volatility, but in the last few days, I've noticed that that's come down quite a bit here. Now, if we take a look at the numbers today, you can see that, percentage-wise, it's still not the greatest. Remember, we need to see some decent movement percentage-wise. That's the way we can actually capture more of the movements. You can capture, let's say something moves 1%, I can take off 0.5% or 0.6, 0.7% off that move. That's where it makes it worthwhile. But you can see that percentage wise, not really a big mover. You can see that dollar did strengthen and yet didn't weaken. And this, I had traders kind of asking the question earlier, we had a risk off day, but we didn't see the yen sort of take part in that. We did see later rally in the yen, but not to the extent that we saw the sell-off in the markets. And remember, we don't always see things to a T where, things kind of move as is supposed to. There will be times where maybe the price action is lagging, or maybe there's just not really that good correlation. So things do break down off from time to time. And as a trader, you need to identify when they're following and when they're not, because we want to follow it when you're seeing that correlated move. But when you see this mixed signals, those are the days where I would like to step back and maybe stand out for a day because, things are not really making a lot of sense. Now, if you take a look at outside of that, same thing, Swiss franc, it didn't really spike that much higher, even though it was a risk off day. So a bit of a off price action there. We continue to see some weakness in the pound did weaken, and we have the euro that weakened as well. We got some news about, news earlier in the day. There's going to be about 20% tariffs against the EU, and that caused that, push down in the euro. Now, Canadian dollar, I must say that has stabilized quite a bit. We're not really seeing the CAD falling apart here. But remember, that's also contingent upon what happened with the tariffs. So I want everyone to sort of keep in mind, the April 2nd deadline is going to coming up next week. So, maybe just a calm before the storm. Maybe there's things either going to be coming out and markets start to take a bit of a beating on that, or maybe it's not as bad and we might start to see a reversal. So that's really that's the overhang for a lot of the things right now. And that's why you're not really seeing things advancing or falling as much, but eventually we'll see things sort of play a catch up. Same thing with the Aussie. Aussie actually was flat for the day, slightly higher, and Kiwi was slightly higher. Now, days like today where you say that this is a bigger risk-off day, now why those two are stronger? Like I said, today is just a day where things didn't really move in with that correlation. So it's a bit of a breakdown of that today. So maybe we'll see a delayed price action by tomorrow. But again, those are the times where you just had to identify that things are not matching up. I got to take a step back. Now, if you take a look at the broader market, you can see that things were pretty clear there. We got the S&P down, you got the World Stock Index down, we got the crypto down. So it was a risk-off day. Gold slightly down, and then here we are, oil slightly up as well. So a bit of a risk-off day in the markets. Same thing with the cryptos. You can see all are kind of moving down. Paying close attention to the Bitcoin, Ethereum. You can see is looking the worst here. So I think overall, I'm not really interested in crypto markets at all here. Now, if you take a look at where we are with the outlook, and this is where I think you need to pay attention to this daily chart. If you kind of look into this price action closely, we talk about how bullish this candle was. We got a bit of a harami candle yesterday, a bit of an inside candle. And, this is where we would expect, things to maybe run up a little bit as we are above the 20, down the 50. But you can see that this candle was a bit of a bearish, candle here, reversing, engulfing most of this candle here and over here. So we did see gap higher on a Monday. So that's really where we're sitting. And I think as it really fills the gap, I think the settling pressure kind of comes in here. And I think this is what I've been saying, that if you take a look at the bigger picture of the markets, this is not the same one event thing where market went from high to low and that was just a buying opportunity and it just continued moving higher. That's not the case here. The markets definitely has a lot more under pressure. So you got to understand maybe the upper move or maybe recovery is shorter lived, and the bigger move is probably to be more to the downside. I think that's what we got to watch out for. And hopefully, in the next few days and by the deadline next week, we'll probably get more clarity and then see a bigger move one way or the other, because that's what we were looking for. Consolidation. Those are the worst, because those are the ones we want to avoid because it's not really giving a clear signal. Now, as far as the announcements goes, we don't have a whole lot in the next 24 hours. We got this final GDP number out of the U.S. I think the focus again is going to be more on what the broader market does. Do they recover? Do they even get worsened? So I think that's something we'll pay attention to. And then we have some numbers on Friday. So I think what I'm really looking forward to is probably next week as we get closer to the deadline, and perhaps after the April 2nd, which is going to be, I think, next Wednesday, we'll probably see a big move one way or the other. So let's just jump into our currency analysis and then take a look at things one by one.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
So looking at the velocity, that's what I'm really looking after here. As you can see, one of the things you'll notice is that things are just consolidating here. Here's the yen. Even though the markets are looking a little worse here, yen is just not taking part. Now, this is what I called a bit of a frustrating part when things are not lining up or matching up. But again, those are the days I just simply avoid. Here with the US dollar, you can see that this thing is also sideways. It's not really breaking out higher or lower. It's just moving within that range. Now, as I go with the Swiss franc, you can see the same thing. It's sideways. It's not really spiking higher or lower. Here we are with the euro. Euro is definitely looking a lot more weaker over here. As you can see, this exponential moving average moving very nicely. So, last week, you can see the euro kind of hung in there. But now this week, euro is definitely giving up more of that, the rally that we've seen here. So I think right now we probably run into more of the support over here on the currency basket. If he breaks this level, I think there's definitely more downside here on the euro. So I think we got to watch out for the euro closely here. Here's the British pound. You can see that we got to move down this morning off the CPI, found its support, and that's pretty much it. It's just in a bit of a recovery here. So here we are, another sideways price action. Let's go with the CAD. You can see that CAD is actually moving nicely here. CAD has been more under pressure. I know a lot of traders are kind of scared to sort of trade the CAD because, once you get burned enough times on a certain thing, you just want to avoid it. And with the news that the CAD has been the most sort of active one. But now if you just closely pay attention to the price action, I think this thing is looking a lot better onto the upside here. So this is where it comes down to the pairing. Is the dollar CAD better pairing? No. Maybe we'll always find a better pairing in other places. Now, here's the Aussie. You can see that despite that big rally that we saw in the equity markets, this thing hasn't run. So it's just showing me that, it's not really falling apart, but it's not really exploding higher. So it's not the greatest movement that we want to see here. On the daily chart, you can see this thing is still sideways. You can see this exponential moving average is still acting as a resistance here. So I think the Aussie still looks more weaker to me than it is. And here we are with the Kiwi. And I think Kiwi kind of doing this very similar thing. They're all failing to rally, especially when market had a nice run and this thing did not. It's a bit of a negative sign here. But here we are with the Kiwi. It's kind of going sideways as well. Now, looking at the velocity score, you can see that its board is all over the place. Where we are seeing nice velocity, +2, is dollar and the CAD. Perhaps we can take a look at those currency pairs. Right now, we have the euro and the yen more in the negative side. Remember, yen can play a wild card, especially when we see a spike in sort of risk-off sentiment. We see those safe haven currency kind of pops up. I'm not really seeing that right now. Well, Swiss franc is sitting at a 0 and yen is sitting at a -2. But you got to understand that those currencies can be a wild card, which can just work against your position. Even though they're showing weakness, they can pop in the shorter term, and then that's just not the right situation to be in. But outside of that, you can see a lot kind of is in the middle that I'm not really interested in. So looking at our possible trades ahead, let's take a look at some setups. So looking at our setups here, again, like I said, I want to go with what's moving. I'm not really going after what's looking the best on the technical setup wise, because, I don't want to get too caught up in the technicals, but just follow where the money is. So first thing I find interesting here, we talk about momentum shifting and all. Here's the dollar yen. Remember, dollar yen has been in a downward momentum for last, pretty much so far this year. So this is the first time you can see that we were consolidating and we finally got above. At this point, I think the dollar actually looks a little bit better to me, instead of the weakness. I know dollar has been a tough currency to trade because if you take a look at dollar currency basket, you'll be like, hey, this thing is not, a strong trending currency. But as you look at some other key currency pairs, we talk about correlation. Now, I'm getting a bit of a confirmation with the dollar yen. It looks more stable. It looks like it wants to break out. So I will put a alert right here above this 151 area. If it gets above it, I think we can potentially get a breakout. And here's the other one, is the Euro USD. If you take a look at this one, same thing, looking at those positive and negative correlation. And you can see this thing is just got below this 50-day, this exponential moving average. So at this point, this exponential moving average has held in a lot better over all the way here. And now it's just showing a bit more weakness. So this is, again, telling me maybe this is where the tide is shifting more towards the dollar than it has been shifting towards the yen or the Swiss franc. And this is where we probably want to make a pivot, because for the way we have been trading, it's a lot different. We've been going after the Swiss franc, we're going after the yen. But I think maybe this is where the dollar could benefit as the other currencies are weakening here. So those are the two setups that looks the most interesting to me. We can, also take a look at things like Aussie USD, but you can see that these things are just stuck sideways. So that's why I'm not interested in playing it, directionally either way. And even between the currencies, I'm not really finding a whole lot of divergence. Here, Euro is definitely going more weakness against the Swiss franc, but then here we are with the Aussie Kiwi kind of going sideways. So stick with current things that are moving, and our goal is just to capture that move, either it's to the upside or to the downside. Now with the yen crosses, it's the opposite. You can see that yen crosses looks like it want to go higher. But again, I think at this point, it's a matter of finding what's moving. Either it's the dollar moving, it's the yen moving, it's maybe the Swiss franc moving, and then we're just gonna pick those currency pairs that are actually moving in that time frame. So in the next 24 hours, like I said, just be cautious. Today was not a great day as far as the correlation goes, but this is where I don't have a confirmation either way. I don't want to be buying with the premise the market had a sell off, and we don't want to be selling, hoping that the price action sort of match with the broader market. So let the price come to you. I think there's some decent setups that we just looked at, especially in those dollar currency pairs. I think that's what I'll be looking at in the next 24 hours. And at the same time, keep a close eye on the headlines. Keep a close eye on anything tariff related, and that's going to have a bigger impact on the markets and the currencies. So that's the game plan. Thanks for joining. See you in the next one. Happy trading.